Shares of the Cupertino tech giant Apple have been under pressure lately as sales of the iPhone have been declining for a number of years. As they reported their Q1 results, we'll take a look at the iPhone numbers that yet again, year over year, did decline in the all-important region of Greater China. You're seeing sales decline on a year-over-year basis. So we'll take a look at the financials over at Apple, their Q1 results, see where the ugly and the good lies in terms of this report. They still have some ways to financially engineer the bottom line as they continue to ramp up that share buyback program that they have. And from a technical perspective, we've got a lot of lines on this chart. We'll clean those up, but we'll highlight some levels where it could still make sense to take a crack at shares of Apple. Hey guys, hope you're doing well out there. Shares of Apple over the past month have been under pressure, down nearly 5%, as you've had a number of downgrades come out for this stock, as analysts have come out and revised their guidance for both revenues and earnings expectations. Now, in the after hours, you are seeing the shares move up roughly 3%. I think a lot of this is because some comments we got from Tim Cook on the conference call, which we'll dive into in just a second. But in terms of the headline numbers, look, revenues came out at a whopping $124.3 billion. Now, that's a huge number. And for any company, it would be tough to grow that, and especially for Apple in this environment, growing just 4% year over year. That did beat expectations by roughly $270 million. In terms of GAAP EPS, also coming in slightly higher than the expectations. Now, keep in mind, the earnings per share always come in with a beat over at Apple. They tend to sort of ramp up that buyback in order to make those expectations, at least on the EPS side, come in with a beat. Now, from the headline figures, you're probably thinking, okay, revenues came in with a beat, so that's probably a good sign. But look, over at Apple, you have a number of different businesses, and each of those businesses are watched by analysts like a hawk, and each of those businesses really have estimates. So the first and the most important business, in my opinion, at the current time at least, is the services business that has been carrying Apple's revenues over the past number of years, and it comes again yet at a bright spot with revenues of $26.3 billion. The expectations were for 26.1. So there was a beat there on the services side, but you had some disappointment out of Greater China as revenues came in at $18.5 billion, well below the analyst estimates of $21.5 billion. So look, you have just a lot of competition over in China. Huawei is pretty much eating Apple's lunch over in China. And look, you have competition in an EV space. You can take a look at Tesla's results. They have competition in China from an EV market. You also have competition on the AI front at this point coming out of DeepSeek. So look, we know China has some phenomenal companies. They make some great products, at least for the Chinese market. I'm sure even if those products were allowed to be sold in other parts of the world, I think they would honestly do pretty well. So certainly China's tech dominance is there, and you can see it's absolutely hurting Apple. It's interesting to note how they will compare against those Huawei phones, how Apple will really ramp up their Apple Intelligence within the iPhones over in China and make it maybe more of a compelling product for the Chinese consumer. Now, iPhone revenues also came in underneath expectations that were close to $71 billion. iPhone revenues coming in at $69 billion. So again, the bread and butter over at Apple remains China and remains the iPhone revenues. Both of those figures coming in underneath expectations. The wearables also came in less than anticipated, just a slight miss coming in at $11.8 billion. You did have higher than expected revenues from Mac and iPad, which both came in with a beat, nearly $9 billion and $8 billion for the iPad. So look, things to note is that the iPhone revenues continue to decline, continue to struggle. You also had some struggles out of the region of China. We'll also take a look at different geographies outside of China in just a moment. But in terms of guidance, we got some color for guidance on the conference call, which just recently ended. In terms of earnings expectations, we're coming in line with $1.65. And then in terms of revenue guidance, that's the more important one. Apple guided for low to mid single digits revenue growth in the current March quarter. The street was looking for somewhere closer to the mid single digits, closer to 5%. So Apple coming in actually just a bit lighter on Q2 revenue guidance as well. Now, on the conference call, we did get some color on different products. So Tim Cook did mention they've rolled out AI onto their devices. Now, albeit that rollout of Apple Intelligence has been rather slow. That's one of the reasons why you've seen a number of downgrades over at Apple from these analysts. But they did say they have more AI things coming. In terms of DeepSeek, they did say that doesn't change anything for them. And in fact, the day when DeepSeek news was announced and you had a bunch of sell-off in names like Nvidia and Microsoft, Google even, you actually saw Apple buck that trend. It actually went up. One thing is because Apple is generally seen as a risk-off stock and tends to move higher when people flock to safety. But the other reason is because Apple really isn't considered an AI player, at least at the current time. And so if DeepSeek comes out with a new AI LLM, well, that doesn't really impact Apple because they're not really heavily involved in AI, at least from what we know. So they did say they've kept AI in-house on their own silicon, and they've always assumed the cost of inferencing would come down, which is why they've been more disciplined with their CapEx investment. We'll take a look at this from their cash flows, but generally Apple has actually not spent as much as Amazon or Google or Microsoft on CapEx. They've been a bit more controlled with that, focusing more so on capital return. Now, where they've introduced the AI, they are seeing stronger upgrades of the iPhones, and the iPhone 16 is outperforming the iPhone 15 so far. So that's a good sign to note that the upgrade cycle certainly is working. Maybe it's working a bit more slowly, but they are seeing that incremental upgrade due to the fact of the Apple Intelligence rollout. They do also say that they don't see and expect a lot of growth in the iPhone for the current quarter we're in. It's going to be the third quarter when they roll AI out to other countries. And as the AI grows, the usage will also grow. And once you start using the features, they expect that you can't really go back. And so that should continue to drive upgrades. They also see a ton of opportunities in emerging markets, particularly in India, saying that the margins will improve and they're in a favorable commodity environment. So I think the thing to note is Apple is certainly bullish on the upgrade cycle, and they're certainly bullish on Apple Intelligence. You could make the case that they're approaching the rollout of Apple Intelligence a bit too cautiously and a bit too slowly in different parts of the world, and so that's hampering the upgrade cycle from really taking off. But if Apple is true in terms of the upgrade cycle eventually taking off, then yeah, those iPhone sales maybe in the back half of the year should be relatively good as those iPhone 15s and lower get upgraded to the iPhone 16. Now look, I'm on the iPhone 12 and it's been working just fine for me. I don't really see that benefit of Apple Intelligence, or at least the need to upgrade to Apple Intelligence just quite yet. But again, if later in the year, the rollout for Apple Intelligence, the features tend to get a lot better, then that case to make an upgrade certainly could be made. Now from their different regions, the Americas did grow relatively slowly from 50 billion up to 52.5. The Europe region does continue to be relatively strong from 30 billion up to 33.8, so faster than 10% growth in that segment. We talked about China as sales in that segment coming under pressure. I think a lot of it is simply due to the fact that you have competition over there eating Apple's lunch. The Japan region continues to be strong from 7.7 up to call it $9 billion, and then rest of APAC essentially flat on a year-over-year basis. And like we said, the iPhone and the wearables continue to be under pressure, but the Mac and the iPad were surprisingly strong. And then at the current time, it's all about services, as services continue to remain strong and carry this business forward. Now from their P&L, it's a very simple P&L to understand. You have total revenues ticking up in line right around 3 to 4% up to $124.5 billion. Now keep in mind, that's still a massive number. This was the holiday time period, so you probably have a lot of gift giving, and Apple's products tend to be ones that you find under the Christmas tree. Now in terms of cost of sales, those did also tick up in line from 64.5, call it up to $66 billion. The thing to note though is the services business, as you added on nearly $3.5 billion on revenues, and your cost of sales on the services pretty much stayed flat. They went from 6.2, call it up to 6.6 billion. So you're getting continued margin expansion on the services side. It continues to drive profitability, continues to really give the stock the premium that it has at the current time. From an operating expenses perspective, this is where Apple really does keep things in check. Their operating expenses don't ever really go out of line. And so that's where you can count on Apple to control those costs and pass on a lot of that operating income straight down to you. So from 40.3, call it up to $42.8 billion. And then your earnings per share growing rapidly, much faster, simply because they're continuing to take off huge amounts of shares from the market. Now from a balance sheet perspective, looks still okay. It's not great. They do have a fair amount of cash, at least on the current side, sitting roughly around $55 billion in total. And then they have another $88 billion in non-current marketable securities. But on the liability side, you have roughly $10 billion of short-term term debt. And then in terms of non-current liabilities, another $84 billion of long-term debt. Now, I'm not really worried about that, Apple tends to get really favorable interest rates on it, so they can likely continue to sit on that for a while and pay it off incrementally over the next few quarters. In terms of the cash flows, you have a $29.9 billion cash flow figure. Now, if you compare it to same time last year, you see it's actually significantly lower, as you generated close to $40 billion in operating cash flows last year. But a lot of that change is simply due to the way accounting principles are done in terms of changes in operating assets and liabilities. Last year, you didn't recognize nearly as much of a loss in terms of your current and non-current liabilities, because if you look at the net income line, that continues to tick higher from 34, call it up to $36.3 billion. So despite the lower operating cash flows, you still have close to $30 billion in operating cash flows. And like we talked about CapEx, this is a company that's not going out there and spending 10, 15, even $20 billion a quarter on CapEx. They're keeping it very, very controlled, very, very in check. And that CapEx still did go up from 2.4, but just up to $2.9 billion. So Apple certainly likes to keep things very in check and run things very lean. And they're absolutely showing that at a time where other tech giants are spending huge amounts on CapEx. They're not going out there to do that. They continue to deploy some of their cash into marketable securities, but the vast majority of those operating cash flows go straight into the repurchase of common stock. They accelerated that year over year from 20 billion, now at $23.5 billion in buybacks in the most recent quarter. You also get a nearly $4 billion dividend. They're also paying off some of that commercial paper and term debt. So all things looking pretty much in line from a financial perspective. This is the type of financials you would expect at Apple. It's in terms of the sales segment over in China especially, and in terms of the iPhone sales, it's what this company will do to continue to accelerate the upgrade cycle. They certainly believe that the upgrade cycle will come into effect later on in the year. I certainly have my doubts knowing how Apple Intelligence has gone, but hey, look, if Apple rolls out Apple Intelligence later in the year and it's a huge hit, then I think you could certainly have that super cycle in terms of upgrades, and you could have a acceleration into the back half of the year in terms of top line sales. Now, from a stock perspective, we talked about that buyback that Apple has in place, and that certainly will continue to put a floor on this stock. So look, I have a lot of lines. We'll clean some of these up. We'll get back to these if we need to. If we can bump up this support line, I think $220 is your level of long-term support. If shares certainly break through that level, I think you'll have Apple come in and buy back their shares at an aggressive pace. And then in terms of moving higher, you have some upper head resistance, but it's not all the way until actually your 260s. So you could continue to move up. Now, there's nothing in these results that really give me the indication that Apple has the room to continue to move up, because certainly from a price to earnings, price to sales, price to cash flow, you are trading pretty expensive considering the fact that your sales have sort of stalled out and a lot of that earnings growth is coming through the form of buybacks. So it doesn't really give me the indication that they have a catalyst necessarily to move up to the 260s to make all-time highs. But look, you could continue to chop around sideways. You do have some support at the $237 mark, but really it's underneath that, close to the 220s, where I would be excited to maybe continue to add shares of Apple. That was my take on shares of Apple. While things necessarily aren't that bad over at Apple, I think they're not as bad as people make it out to seem. Things certainly aren't great. The iPhones have stalled out, and you have huge competition over in China continuing to eat market share. They are trying to tap into other emerging markets like India, where I think they could actually have a lot of success. But certainly the iPhone sales here in North America also continuing to flatten out. So a lot rides on the rollout of Apple Intelligence later this year. If Apple can be that company that really brings AI to the masses, instead of using AI through ChatGPT, if you can use it on your iPhone every day to do more useful things, to write emails better, to respond to messages faster, and to be more productive using your iPhone, then I think Apple certainly has the case to continue to move up. I think that super cycle could certainly take place later this year. That was my take. Let me know your thoughts on this one in the comment section below. As always, thanks so much for listening, and I'll catch you guys in the next video.